Okay, good afternoon, everyone, or good evening. Okay, let's begin shortly, get all this stuff up and running. It's always nice to have Windows updating all the updates. Just kind of always drags on time with the amount of work. You know, it's just one of those processes that you have to kind of deal with. It's one of the worst things about. Now I kind of understand why everyone kind of loathes using Microsoft Windows because of these crazy updates. Personal wise, yeah, it's not a big issue because you can kind of, do the updates on your own. But when you're doing something at scale, yeah, it's a pain in the ass. Okay, so we're kind of offline with the radar because of Windows updates. So I do need to probably update that and just make an announcement. If you're joining me and you can hear my voice, maybe raise your hand so I can get some confirmation. Thank you very much. Let's take a quick look at the futures and then start our trading plan. Futures are up. Dow is up. S&P is up. NASDAQ is up. And we got this BLT. So the whole point of this focus session is to kind of, just to get everybody planning their trade week. When you become a bit more, when you go through this routine, what happens is your planning will be much faster, and you'll know what you're looking for, because it's kind of like when you go to Costco and you have a shopping list, right? And you go, if you don't go into Costco with a shopping list, then you can spend quite a long time in Costco looking through things, each and every aisle, and then end up buying things that you don't really need, right? So if you go in there with a plan, then, and all the aisles in Costco, then you'll be in and out pretty fast, right? And it's kind of like that also applies to trading. If you get into a trade and you know the trade plan, then you put in, $2,000-$3,000, and in literally 30-40 minutes, you're up maybe 200-300%, and you're done for the day. Okay. You might get confused saying, oh, well, you want to be a little bit greedy and you want to keep on trading because there's more money to be made. And that could be up to you, right? But usually when you come up with off of a big trade, then you want to really reduce your risk, kind of like, probably back to the original. So if you start off with $1,000 and you're up 3,000, you want to go back to trading with the initial position size. But The focus session today is going to be focusing on the week of June 14th into 18th, and we'll be talking about first of all, we'll look at the futures opening and write down the summary to kind of help us understand, engage the market. So futures, ES, YM, and NASDAQ, they're up. So they're trading positive at the open. And we want to probably make note that this week is a very special week. It's called triple witching. So triple witching historically, if we take a look at, the next thing is to take a look at the predictive calendar. So let's go to, let's bring up the calendar here and then type in calendar, and we can see that I should update the trend values. So I have somebody who does it for me. Yeah, let's just copy this image. Calendar, right. Right. So June, the June 14th into June 18th looks like it's relatively bullish from the 14th, 15th, 16th, 17th, and 18th. So the 16th is the main issue, right? Because that's after 10:30 on Tuesday, a.m. Eastern time, the market can get a little bit choppy and then maybe fade into the close, hence 10 seconds into the close. Yeah, I'm live. Yes. So find the Zoom link. So June 14th, we're expecting the market to be relatively bullish. If we take a look at the futures, the NASDAQ is up 0.16%. Then going into Tuesday, right, there's it's still relatively bullish, but then 10:30 a.m. Eastern time, that gets a bit tricky because the market could chop and then fade into the close. And then Wednesday is relatively bearish most of the time, and that we would be able to determine whether Wednesday is going to be bullish or bearish based on the market internals like trend. So last week we saw the trend hit like 2.14 on I think Monday or Tuesday, and then I made a message, an announcement to everybody that because the trend was high enough, we're expecting more bullish trading action into the 9th and 10th. So that's going to be the same thing for the 16th. Market internals will give us some clues, and especially the VIX. VIX is going to also give us clues whether risk is on or off. Okay, so if the VIX is dumping, then risk is on. Everyone wants to put more money into the market for some yield. If the VIX is pumping up in super green, then yeah, risk is off. Okay, we want the VIX to be red. And then going into Friday, that's triple witching. Those are all when the leveraged instruments are all expiring, and mainly the futures are going to be rolled over into the next set of contracts for the next month. That's going to happen on the last hour of the day. So the last hour on Friday, the markets should get pretty nasty, and then post quad witching starting, it'll be hard to tell what June 21st is going to be like, but we're expecting June 21st to be bullish. So that's still consistent with the TGIF cycle. And then the market should get pretty nasty sometime Tuesday, or even starting Tuesday. Post triple witching, markets should start going to correction mode, and it'll be a pretty nasty week starting on June 22nd, or the last hour on June 21st. The market should start to show some weakness. It's too early to tell. No one can really know what's going to happen on the 21st, 7 days out from now. But post-clutch witching has the characteristics of markets being pretty choppy and corrective. Okay. So the plan for this week is to assume risk on from June 14th into the 18th. Every dip should be bought. Okay. Especially into Monday and Tuesday. Wednesday, we'll have to kind of look back at the market internals to see if we get some high trend values. That's going to give us some clues on whether the market will continue to run up and make 52-week highs. And then on June 18th, triple witching, the last hour of Friday will get pretty nasty. Okay. And puts will probably be, for day trades, puts will probably be something attractive to do on this day, on the 18th. And then post triple witching, as I repeat myself, is going to be nasty. So you don't want to be holding, like, let's say you're going into this week, June 14th, with 12 to 15% risk. So let's say you have like a $10,000 account and you have about $2,000 or $2,000 to $1,500 in the market right now, holding over the weekend, right? So June 14th and 15th, that makes sense to have that type of risk holding over the weekend. But next week, you want to be looking to not do that and swing. You want to probably look to reduce, as we expect the market to go into some bear territory, bear country next, starting June 22nd. You need to somehow remind yourself, like make a sticky note. But we'll talk about the. There will be a reminder again every Sunday. There's going to be a focus session just to make a trading plan. Like I said, when you go shopping, it's really hard to go shopping without a list, right? You want to look at your kit, look at your fridge, look at the things that you need to buy, and then write it down, right? And then you go to Costco or wherever you're shopping, and then because you've been there so many times, you know exactly the path that you have to take to get all the items that you need for your house, for the things that you need to eat, whatever, cook. And if you don't have a plan, then it means you either know like the markets very, very well, and like the strategies very well, or if you don't have a plan, you're just going to be buying everything. Okay. I just have this interesting, I don't know if I should, let me just post it here. I've been working kind of overtime with some of the programming that I've been doing for these servers, especially SQL based. And I've been drinking some Red Bull. And believe it or not, this Red Bull that I'm holding right here, okay, it's a, let me see if I can take a picture and post it quickly. It has this interesting warning, okay? And where is it? Let me see if I can quickly take a picture of this and post it in the Discord room. Yeah, so I just posted it in the Discord room. And if you read it carefully, it says 1 can max daily. Okay. So it even recognizes that there's a limitation to how many cans a person should drink per day. And that also applies, and this is hardcore stuff. If you think of Red Bull as an option contract, right? Red Bulls are pretty crazy in terms of energy. They have a lot of crazy stuff in here that's going to get you that energy boost. And that's kind of like leverage, right? I think of Red Bull as leverage in terms of, that energy. So if you can make the relationship somehow that Red Bull is a leveraged instrument used to increase energy, options should be approached in the same way. You should figure out your limits. Okay, one can max daily. Okay, or for options, maybe it's 2 to 3 trades per day, or one or two trades per day. You've got to figure that out. That's and unfortunately, if your account is smaller, like $3,000, then there's an inverse relationship between the number of trades and your position sizing. It's a very difficult thing to kind of balance, but you have to first figure that out before you start, trading like crazy. I would say I'd recommend for smaller accounts 1 trade per day, and then if you have bigger accounts, up to 3 or 4. We do have active trade alerts, and I've been going through that. That's pretty crazy stuff that Bags does. I don't know if that's, these are all, I would just use these as trade ideas and still go through some of the opening, the onboarding stuff, and try to filter out trading ideas using the ideal trade setup. Okay. And I'm not going to go through that today. I've done that to death. So the trading plan is important, especially for those who are just waiting for trade alerts. I highly recommend not to wait for trade alerts. It's just I want having discussions with other people, having a trading plan, going through what types of setups are, or what kind of markets we're expecting for the week of. It will help prepare people and for that trade. And of course, one of the worst things that can happen in the market is you focus on the tickers that you want, but all of a sudden somebody comes in and says, oh, GME is up like 100%, and then all of a sudden you're in the chasing mode. That really is unless you've identified or been looking at an A8 for that GME. If you didn't get into the trade, you just have to kind of call it, assume it as a write-off. You should not go back in there because it's already been messed up. So you want to just keep on focusing on your strategy, sticking to your trading plan. And if the trading plan calls for instantaneous gains with 100% accuracy, then maybe you need to make that trading plan a little bit more, refine it a little bit such that you can attain such performance, which I don't think it is possible. Anyways, so the first thing I want to talk about is the futures, and the futures are currently up. So in this evaluation for June the 13th, so after I finish with the trading plan today, I'll make this presentation available for everybody to review. Okay, so the first part of the presentation is just to talk about the futures, and the futures are green, so that's good. At least it's not, there's no short circuit breakers where the market's crashing 5%. It's really good that the markets are green because any long positions we have going into triple witching has a probability of moving higher. And predictive calendar is showing 69%. I don't know why 69%. Probability of success, okay, into Monday based on the predictive calendar. But we want to make a note here that the futures are extended above the 6-day moving average. So we do want to make a note of that, right? Because extended positions can always introduce a pullback to the 6-day moving average, and that would get pretty nasty. So if I show you here clearly, this is the NASDAQ, and you can see that. Can everyone see the screen here? If you can, please raise your hand. Can you see the chart of the NASDAQ? Thank you, JJ. So you can see that the the Nasdaq, if I draw that arrow right there, it's way up above 14,000, which I discussed last week. And then the 6-day moving average is way down here. Okay, that's if we measure that move from here to here, well, the 6-day moving average is okay right here. That's a 0.8% drop. So let's assume that the next 6-day moving average is going to move up to this box right here. That would be about a 0.67% drop. This drop is going to be this drop in the pullback to the 6-day moving average will probably happen post quad witching or even Tuesday into Wednesday, right? Because Tuesday at 10:30 a.m., because you know that you can be a better trader by knowing what to do at around before 10:30 a.m. Tuesday, by reducing your risk, you're going to definitely prevent yourself from a possible pullback that could happen on Tuesday into Wednesday. We are assuming that this week is supposed to be bullish, but we want to be still aware that a pullback, even on, well, technically here, if we take a look at this candle right here, that's the bacon, and then we got the lettuce here, and then we should technically move up way up here. Okay, and obviously that would be super extended, and if that happened on Monday, that's great, because that would definitely help with a lot of our calls. That's about 1.5%. So BLT to the upside here is a possibility, but if it kind of stalls and the VIX starts to reverse from red to green, then maybe we just end up consolidating a little bit here for the next couple of days as the 6-day moving average moves higher. And then we get another pop on Friday like this, maybe like a triple D BLT, and Friday becomes bullish. And then we move down to do the 21-day moving average, ET, to the downside next week. Okay. So that's what I just wanted to, so caution here. So caution here, and then Tuesday, 10:30 before 10:30 a.m. Eastern time, we need to exercise some caution because the market's extended. Okay. So the plan, so that by writing this down, I'm already kind of I'm already preparing just to reduce my risk sometime before 10:30 a.m. Tuesday. But during that period, if the VIX is dropping and the trend is showing nice power hour rally with a nice red profile, then I'll hold as much as I can into the end of Tuesday, and then see evaluate the positions at the end of the day, whether to hold into a Wednesday or just reduce the risk and see if I can buy some positions at a discount if the market pulls back on Wednesday. 69% probability into Monday based on the predictive calendar, so that's good. And the market is futures are up green, so that's consistent with the calendar so far. And then evaluate the decision matrix. So the decision matrix is what I say here. Just looking at what these systems are doing, because I developed these systems because I believe that trading a handful of tickers is a lot easier than trading all 2,000 companies, especially if they're meme stocks that are moving up 100 to 200% on the common share. I still believe that if you just keep on doing what you're doing, the management is a little easier than starting to go into other parts of the market. So currently the system is long Apple, short Boeing, long Google. So I'll just put these plus and negative signs to indicate the status of the position. Long NVIDIA, long Roku, that's the TGIT. And then it's long shop. Okay, so that's the stat. That's that's me. That's the 750R. The evaluation of the decision matrix from the 750R. So what does that mean? It means that the system is more bullish than bearish, right? Because there's out of all the open trades, active trades that the system's in. So that's 2, 4, 6. It's long 5 and short 1. Okay, so obviously if you do the stats on that, that's well above 80%. Okay, so then having done the summary of the market for the week of June 14th and 18th, so far I have a very bullish approach to the market based on the decision matrix, based on the calendar, and then the only caveat here is the extension of the markets being above the 6-day moving average. That's just the only caveat. Okay, now the trade plan and risk management. So last week was a pretty good week. A couple of positions didn't work out, like the Airbnbs and the Boeings. So my Boeing, I still have them and they're drawing down to the point where they're almost compromised. But I did get into some trades like PayPal and Google, and they have done extremely well. And then those were off of the 78-minute Purple D setups. At the moment right now, I have Roku. So that's TGIT. So my trading plan here is they're drawing down, but I average down a little bit more. So that's the beauty of being able to trade based on discretion. I have the opportunity to average down. So I have a little bit more than 45 contracts of Roku. And the onboarders should have 10 and they should be drawing down. But the plan here for Roku is to close, again, the same thing, close half if you have average down for onboarders, continue to hold. And close before 10:30 a.m. Eastern time. So, and then if Roku positions develop into a profit, for example, i.e. 100%, close half. And that's like a general recommendation, right? General plan. So you buy 2 contracts, they go up 100%, you close off one and you got one position that's paid pretty much for free. So that's the plan for Roku. Onboarders will be definitely drawing down because we had picked up T-Doc and Roku. They're both drawing down, and you'll continue to hold those until Tuesday. And then with the Boeings, so compromised at the moment. And if possible, look to salvage any remaining amount on Monday or Tuesday. So that's a 1.5% position size. The Google trade and the PayPal trade definitely covered those and all the rest of the drawdowns, because I think the Google went from like 240 up to $7. But I think I closed off half at 340, 360, and the other one at 690. But so these positions, obviously, if I knew that this was going to happen, I would have salvaged the positions earlier than before. But 1.5, having one compromised position for the week is not it's not that bad. I mean, it's basically if you take 7 trades or 10 trades, then and you say 6 of them work, then 4 of them out of the 4 that didn't work, you try to keep your losses to a minimum. Some people use 50%, some people use 70, but maybe even one of the 4 positions that do draw down and not become winners, one of them can go to 0, and it still wouldn't really affect your balance or performance significantly. But in general, you try to keep your losses as low as possible. So Boeing is not looking good and it's pretty much compromised, but I'll still hold on to them and look at them for now. Boeing's been pretty tough. I'm actually thinking about just taking out the Boeing TGIF and putting it into a different server. And as for TDoc, yeah, I didn't want to hold on to the June 18th contracts because I want to just focus on just the Rokus. But TDoc is a 3% position size, which is pretty much tied a little bit. I think right now it's the Roku that is a little bit bigger than TDoc, but TDoc is for July. So these are the July contracts. It has an A6 and A8. Also, Roku has an A6 with TGIT triggered. And TDoc has A6, A7 potential and then also a Wolfwave plus a Wolfwave 5 on the daily. So that's an exponential trade setup, asymmetric type, where it can move quite substantially, but it was not trading very bullish on Friday. There were 2 daily Wolfwave setups on a couple of these charts. One was Zoom, and I picked, Zoom just really moved quite. I should have put 1.5 in Zoom, 1.5 in TDoc, but Zoom moved quite a bit, and it has this Wolfwave, daily Wolfwave. I was thinking about buying it here, but then I picked TDoc. So if we take a look at TDoc, TDoc has a Wolfwave 1, 2, 3, 4, 5. It has the 5 here, and maybe we might get some luck coming tomorrow as this A6 tries to break through this target here at 159. 159 takes us up to 165. So target for TDoc, 165. Breakthrough 159, then fib extension at 1272. Target is 165. So for Roku, let's see what the target's going to be for this. So Roku ended up with this complicated BLT. So with a complicated BLT, it's either going to make the same magnitude of the bacon here, and possibly reach up to this target of 358 by Monday, end of Monday. So that's the BLT complicated because it closed on red. There is an A6. All the MACDs are pretty much positive gradient here. And if the future continues to trade green, then most likely Roku is going to open inside this red candle. So we don't know if it's opening here or opens up here or in the middle. But based on the futures, looks like Roku is going to open inside And then if it breaks through this 1272 that I have outlined here at 351, which it kind of did on Friday, and then pulled back to form that BLT setup. Then we watched the pre-market, the price action when the line set at 4 a.m. Eastern time to determine where the opening price will be. And if it opens up inside this candle, then we've got a BLT setup all the way up to 358. And it kind of has a wolf wave 5 setup on the daily. It's not that clean. It's got 1, 2, 3, 4. And I guess what's going to happen, I've seen this before with this type of setup on this wolf wave. Usually if you get this wolf wave pattern developing in 5, starts to go into the 4, pivot 4 territory, then this whole entire wolf wave is just going to disappear and price of Roku just skyrockets. Okay, because it's expecting a wolf wave 5, which means it would have to pull back even more and then trigger. But if this pattern, this wolf wave pattern becomes invalidated because of the 5th pivot is now exceeding the high of the 4th pivot, then it's another form of a breakout. So we would only expect a breakout based on my experience if there's a 78-minute TTM squeeze, which there is a 78-minute TTM squeeze forming at the moment. So the magnitude of the move, I'm not really sure if on average TGITs are around 4.5% on average. So from where it is right now to 4.5% would take us up to about 360. Okay. A 4% move in Roku takes us up to around $560. And we have the 375s. So those would appreciate from the purchase price at $1.70 would bring it all the way up to about 350 if it gets to 360 by Monday. Okay, so the TGIFs have been TGITs for Roku has been doing very well. Last week on Wednesday, we should have taken we opened up Google instead of Roku, like here on Wednesday, 10 seconds into the close. I don't know if anybody took that trade with me, but the trade was on Wednesday, 10 seconds into the close, as the market was dumping really hard. What happened was we were looking for actually a hedge. We were going to hedge the market on Wednesday going into Thursday. But in a market that's this strong, it's hard to, first of all, everyone should know that I'm not really a bearish. I don't like to be bearish America, because I'm like, everyone knows that I'm very, very, I believe that America is the strongest and most powerful country in the world. It's a great country to live in, lots of great opportunities, but it's hard with that type of attitude. It's hard for me to really buy puts unless the company really messed up. So with this Google trade, there's no bad news. The media and all the news outlets on Google have been pretty neutral. So there's this purple D, okay, that was forming, and you can see that the algorithm here is long Google. 10 seconds into the close, this is where I opened up the contract at $2.70. And believe it or not, that $2.70 contract actually went down, no, $2.40 actually went down to $1.30 on Thursday morning. That just a small little delay like that, like a little move from here to here. I don't know if anyone was in that trade with me, but I picked up 20 contracts of the Google calls 10 seconds into the close at 240. They didn't draw down any lower. I don't think I could have got them any cheaper. The only time I could have got cheaper was Thursday morning, right there. Okay, right at this point, right there, they are trading at $1.40, and then it moved up to $7. Okay, so $1.40 to $7 within 30 minutes. So you can kind of already understand when you trade options and you go through a drawdown, it's part of the business. Look at that. I opened the trade right here on Google, right there on the last 30-minute candle of the day. Okay. And getting a hit of like 50%, 40%, holding it overnight is crazy, right? That's the business of options. And if you want to get into that trade for the purple D short squeeze, you got to take it, right? And this is what we've talked about. This is the ideal trade setup. You can see the 78-minute TTM squeeze here. It's got every single thing that you want in an ideal trade setup. Okay, so we took that trade. I bought, after the PayPal win, I had about 100 contracts in PayPal with the weeklies and the 275s for the next, that expired this week. I should have held on to the one contract. I don't know why I keep on closing out these freebies. I probably shouldn't do that, especially when the market's so strong. But I wanted to use the PayPal cash to buy more Roku. Okay. But PayPal did very well on the weeklies. So I used that money and I just literally dumped it into Google on this candle right here. And then when it opened up on Thursday, they went from like 240 down to like 150. So that was pretty nasty. But you got to give it at least 30 minutes, and then the short squeeze came through and then pumped those contracts up to $7. So from those 20 contracts, I closed about 10 at 350, 360. So that covered the whole, pretty much the entire cost. And then the last 10 contracts, I closed them off at around 650. So that was those two trades on PayPal and Google covered everything, plus and all the drawdowns, plus ended up in the profit at the end of the week, which is good. But you can see what happened immediately after the short squeeze in Google. It dumped hard. Okay. And at the end of the day, it still retained most of the premium. And actually, believe it or not, after all this chop, okay, this chop here, they were trading here at high at $7. At the end of the day, it still closed higher than its open, I believe. Yeah, just a little bit higher. And they were trading at $4. So that's a $3 difference. Okay, so if you don't manage your risk, and you get into a position where it spikes up from 1 to 7 and you're just holding on, you don't do anything when you see 100% profit, the market will manage your account for you. Don't let the market manage your account. You should manage it, just like you do with your breathing. It should be a very involuntary action. And if you see 100%, just close off one and then just try to figure out what to do with the rest at the end of the day. But yeah, it went from 140 up to 720, I believe it or not, pulls back and then closes higher than the open, and the contracts ended up being at 420. And then I guess they ended up being worthless on a Friday. There is a 78-minute TTM squeeze in Google. A breakout above the previous Friday's high would take it up to, I think it looks like Google's trying to make a run to 3,000. Let's take a look at Roku quickly and then TDoc. So Roku, with the extended hours on, has this purple D. Okay, you can clearly see the purple D there. The algorithms are long on the S3XY, which all members should have access to. Okay, if you want to improve your trading, you should have that algorithm as part of your decision matrix. But you can see that the purple D's there, these pre-market gaps are getting worse, which is giving us signs that when the market does correct, it's going to correct hard. The purple D here with the Hikinashi setup is good. It's not bad. You can see the momentum is still playing positive with a 78-minute TTM squeeze. And like I said, every average move, we have about TGIT triggered last week, so pretty much about 1.7 million dollars have been mobilized in most people's accounts under my supervision. And with that being said, the average move we're expecting on this TGIT is around 4.5%. So 4.5% from where we are right now would take us about, yeah, like I said, 360. Well, 363. So let's just say like around number 4%. And if we're really lucky, okay, on this Roku trade, because if you take a look at the daily Heikin-Ashi candle, it is actually showing a Darvis breakout potential on this yellow D, okay? So yellow D, try not to think of it as an innuendo, same like with purple Ds, but this is a setup where, you know, the momentum has been building off of that Heikin-Ashi daily candle. We caught a couple of good trades in Roku last week. There was a one that I wanted to really catch on that 30-minute TTM squeeze with the extended hours off, which happened right here, I believe, or it was on the server. I can't. Let me see if I can quickly log in. Hope everybody had a good weekend. So that purple D on this Roku right there on that 30-minute TTM squeeze. Yeah, that happened on a Monday, I believe. So I wanted to get into that one, or was it this one? I can't remember. I wanted to get into one of these, but because it wasn't in line with the cycle. But anyways, it's obviously trending higher here, and on the momentum, it's still long on Roku. And unfortunately, it looks like the MACD is still above the zero, which is good. Going into a TGF cycle, NASDAQ is still green, and a break above 352.74 gets us up to 360 really damn fast, and that would probably be the end of it. So with this purple D and the yellow D on the 30-minute, 78-minute, and the daily, I would not be surprised to see this trend here in Roku, which ended up becoming around 30%, doing the same thing again on this Heikin-Ashi trend for another 30% move, which would take us up to about 423. And I believe there is a gap there on Roku at, there it is, 431. So what does that mean? It means that we could this week for Roku or next week. I don't think it'll be next week because it's post triple witching. There is a chance that Roku can move up 25% this week, right? Because if the market is expected to dump next week, then obviously wouldn't it make sense to pump and then dump? I don't think it makes sense to dump and then dump and then dump, and then next week comes around and it dumps even more. It could do that, but so far the way that Roku is holding up here, it looks like it's poised to break out this week. Okay, now the question is the breakout going to be the one that takes us up 24%? And we'll know that between now and Tuesday. Biggest moves in Roku have been around 17% for the week. So that doesn't cover the whole 24% move. That means there's still one more TGF cycle next week that's going to be able to complete this gap fill at 433, right? Because you can see the gap here from a mile away. Moreover, there's gaps also under Roku here at 266. And there's a couple of pre-market gaps under and above it, which I don't want to go through because it's just too much work. You can do that for me if you like and share it with me in the room. But yeah, you can see the upper and lower bounds of these gaps that are clearly, you can see them from a mile away. And I think there's a couple more even lower in this Roku chart, which is not going to be discussed because they're way, like here's one right here at 148. Jeez. So yeah, definitely there's a market crash being priced in. But oof. But this gap right here has to be resolved. Okay. They all get resolved. So in terms of being optimistic, I think we should be able to get a good chunk of this move on Roku. That's 25%. So we should be able to get 12% of that, half of that, just being like a halfer. Just thinking and learn in terms of half, 25%, 12.5% of that could be something that we could see this week. Okay. So then let's just assume that, let's just take the hypothetical approach and say, okay, let's say this does really move. Let's say Roger, this guy from Canada, is correct and half the shit he says is wrong, but let's just say he's correct for this time. And he says 12.5%. So 12.5% will take us up to about almost to $390. So $390 then would translate for our $375, $15 contracts on our 375 calls. Okay. Hard to believe, but you can't rule it out because anything's possible, right? I'm just, you can clearly see the structure of the market showing you your risk and reward potential. It's just the problem is, are we in that position with these contracts that is it going to explode? 6% tomorrow or like 12% tomorrow. What is it? We don't know until it actually happens. And given the fact that we are in a TGIT cycle with about $1.5 million of USD currency mobilized in the position, it definitely puts us in the probabilities of success that's definitely greater than 50%. Right now, the profit factor is the main question. Are we really going to get a 6 to 7, 12% move tomorrow? In terms of the structure, it's definitely within reach. Is it going to happen this TGIF cycle, or is it going to happen next TGIF cycle? We don't know. So, but we do know this week is bullish. Next week, after Tuesday, it gets bearish, right? So that's the best information I can give right at this point. So like everybody else, I'm holding Roku, and I can't, if you're drawing down, you're drawing down. That's the nature of options. Obviously, you didn't sell your house and put all your money in the specific trade. You put a percentage, like 2-3%. And then if you're onboarding with a $10,000 account, you should have at least 10 to 8 contracts. So that's the plan for my trades for this week. Boeing, I'll see what I can do with that. There's not much, if it's worth only like $75, does it really make sense that I want to spend 10 minutes on a $75 position while, these other positions, other trading opportunities may present themselves tomorrow? It's always a question what to do. So let's say you're in a position, you have two positions. One of them is up 100% and the other one is down like 90% and they're worth like $50. Some people actually close the $50 and try to save that $50 rather than look at managing the position that went up 100. Okay. And and the answer is, you should let those positions that are compromised, you should leave them alone and then look at them at the end of the day and then think about it, because all the action that's taking place where you have to manage your risk is going to happen within the first 30 to 40 minutes. If your positions are already drawing 90%, it means that the market has already managed it for you. Now you just have to make a decision to spend time to evaluate and close them off, which is a cost in terms of opportunity cost. But you manage them in the first minute in the morning. That means you've allocated at least 3 or 4 or 5 minutes to closing a losing trade, which is not very profitable. What you want to do is you want to use your time in the first 30 minutes to make money or manage your risk, not focus on the losers that are not making you any money, because that's the opportunity costs you're playing with. All right, so in terms of the trading plan, I have the TGIT TGIF chart here updated, and you can see that the performance has been pretty choppy. And then if you actually zoom in, I've actually included the probability of success metric here. So it's been actually successful in terms of the win rate. It's 57% win, but the profit factor has been less than average, below 1. So it's not really performing at the profit factor of 2.75, which means that the market is choppy, and you can see that it has been choppy. Even though the S&P and NASDAQ are making new 52-week highs, which is almost like a smokescreen, some of the other companies, like if you take a look at Apple, right, and our beloved Tesla, Elon Musk, our savior and God Almighty, you can see that the year to date, I've talked about this many times, but year to date performance in Tesla is currently at negative 17%. Okay. So no one's really making millions of dollars trading Tesla. I mean, not trading, holding Tesla. All the people who are buying common shares back here, they've probably liquidated some positions, right? Or to pay off some bills or buy a new house or whatever. But in general, Tesla has not been moving. It's down 17%. Okay. And then if we take a look at Apple, which is apparently the best company in the world, year to date, it's still down about 6%. Okay. So it's been a very choppy market, and what we're expecting the market to do is actually move up from where it is, up another 20%. So it's down 5. It covers the 5 and then makes another 10, so 15. And let's just say 20% by the end of the year. So Apple, excuse me, has 20% of value if you load up at this point in time. And is that something that you should do right now? No, because the only problem we have left is that triple witching post week. Okay, so July 1st going into the 4th of July is probably going to be the most bullish week of the year. And that's going to kick off these Apple A6s. You can see the daily time frame for Apple. It's got this A6. You turn on the Heikin-Ashi candle, it's actually looking pretty damn bullish. Okay, with these double Ds on the Heikin-Ashi candle. But if Apple starts to move, it's going to move a lot, like it did here. It moved up about 12% this period. So we could probably see a little bit more than 12% on this next, with this A7 here on Apple. I would not be surprised if Apple makes a run to the end of the year up above 145, which is a 15% move. By the end of the year, Apple should be at around 15% higher, or somewhere near 20%. That's $150. So price target for long-term price target in Apple is $150. And you can see that the weekly Heikin-Ashi candle has started its first leg. Okay, just the beginning. So my trading plan has actually changed a little bit to focus on So I'll duplicate this a little bit. To make the trades just a little easier. Apple is very popular because this bid and ask is very tight. Trade plan for the last week of June. So Apple weekly Heikin Ashi candle is long with A6 and A7. Look for a 20% upside from July into September. September 9/11. That's the most bullish day of the year, right? So that's something that I want to focus on is the Apple Heikin Ashi candle. So if you're looking for a very no-brainer trade, and you know that the week post triple witching is going to be pretty nasty, then you would probably look for buying opportunities in Apple in the post triple witching week, because it's going to move a lot from where it is right now. It might chop a bit, but it's poised to make a breakout to 145 within the next 2 to 3 months. So that's something that I really like. And the next weekly candle should be a little higher. Okay. And then post quad witching, like you can see, if you take a look at this pattern right here, you can see that one of the candles pulled back like a lot, like down here to a double bottom. So that could happen after it makes. So that's the first week. Second week, the third week could be higher, like one of these things, and then you could get a pullback like this, or like, let's see if I can show a good example here. Yeah, see, like this in this run up. How did it look? Yeah, like this one right here. So that could be next week, but it just continued to move higher. Now, is that a valid assumption to say this is going to be repeating here? It could be. I mean, this one didn't have an A6 or anything around it, but this one does. And there can also be the case that triple witching, post triple witching, ends up not becoming bearish at all, because maybe the whole market is assuming a bearish week post triple witching, and that could be possible. And maybe some parts of the market are bearish, but the FANG stocks, which have been underperforming the market, has lots of catching up to do, and maybe it's able to move higher. But I wouldn't be jumping into conclusions like that, especially when you take a look at Apple's. Like, we just want to be kind of a little bit careful, because there's a gap here in Apple at 120, and then there's obviously a gap here at 131. So it's almost like another Roku trade setup, where pre triple witching, the chances of Apple moving up to 130 is higher than moving lower to 120. So Apple is a great trade for a move up to 131, and then post triple witching, it goes back to 120. It'll still be trading within this range, and then eventually the A6 will kick in, right? Whoops. And then moves Apple a lot higher. to run it up another 20%. So trading in range right now, there's a good chance that Apple fills the 130 gap first, then fills the 120 gap post triple witching, and then consolidates enough such that the A6 ends up triggering to the upside, and then takes it up to all-time new highs to maybe 200. Oh, there's another gap here in Apple. Holy cow. So yeah, every time I see these gaps, I'm just always shaking my head because I don't know, like these gaps are just everywhere. But let's just hope it doesn't. Let's just hope it does. Like the daily Hikinashi candle for Apple for now is still bullish. So unless it starts to change, like it's a doji right now, unless it starts to turn into a red Hikinashi candle, all arguments and discussions about gaps underneath it being filled can be on the sideline for now. When the Hikinashi candle is green, then all discussions about gaps above it can be discussed for now, especially into a TGIF cycle. Let's go through a couple of trading opportunities, like look through some charts. If you have any charts that you want me to look through, let me know. And we can go through this together. So let's just look at Tesla for now, because everybody loves Tesla. I love trading Tesla, love and hate. But you can see that Tesla has a purple D with a daily A6. Pretty bullish. And I believe there's a lot of gaps. Yeah, look at that. It's almost as if the market is just, you can see the gap there, and there's a gap here. And there's also a gap way down here. Okay, you can see, so all those green lines represent gaps in Tesla. Actually, there's another one. Oh no, that one got filled. And there's pre-market gaps as well. So this is a pretty tough trade, but it is a TGIF. So if it's a TGIF, then obviously we should be assuming long, and it's got a purple D. And if this has a good chance to break out this week, it looks like it's making higher lows, because you can see it's a wave 1, 2, and then is this a wave 3? Right? We won't know until it actually breaks through, but that's a double top formation right at that purple D at 634. If it's going to make a move up to 634, it's got the best shot to do that Monday and Tuesday. It's got an A6 here, so you can count your cycles out of the position on cycle 1, 2, and 3. Depends on the pre-market. 78-minute TTM squeeze on Tesla has looked, it's got a purple D as well with the 78-minute TTM squeeze. So it does have a short squeeze setup underway. Did not pick these up at 10 seconds to close because I'm in the Rokus, but this is something in terms of a trading plan. If you see it green at the pre-market, say it's up like 1.15%, that is a good to go. Okay, and then it could probably run up to a double top at 726. And I believe there's a gap here in Tesla. Yep, right there at 700. There's a pre-market gap. So you got to find all these inefficiencies. These inefficiencies within the structure, these are all done on purpose, right? Because somebody's got the money to do that. Everything that looks like it's inefficient is actually done on purpose, because this is a market that's made by man, okay, humans. So women, men, who whatever gender they are, whichever group they belong to, they have the power to manipulate the price so that they never lose money, never. Okay, so there is a move that potentially for Tesla to move from where it is right now up to 700, which is a 16% move. could this be the week where all the FANG stocks or the tech stocks that have been underperforming the market, could it be the week where it just keeps on running like up every single day? And that's the question that everyone is thinking about, right? Because there are moments in the market where all the techs can run up green every single day. And it sure does seem like that it is a potential, especially going into this week, since triple witching is generally considered bullish. So if they were to pump and then dump, I would not rule out that Wednesday could end up becoming a very bullish day. Let's just take a look at the economic calendar, USA, and see if there's any Fed speaking on Wednesday. So, nope. Nope, no, not June 9th, June 13th. Wait, June 16th. Oh, shit. JP. Yeah. JP is speaking. So a bearish Wednesday could end up becoming a bullish Wednesday due to the JP. JP is speaking. And it's not FOMC, right? So let's just write that down in the economic, in the PowerPoint presentation. So I copy paste that and then put it into the trading plan. So is Wednesday bullish or bearish, right? So then I'll write down most of the time into FOMC or non-FOMC events. Wednesdays are generally choppy to bullish, bearish, especially Tim Apple. Okay. Only a Fed or government can invalidate the bearish Wednesday curse. So Wednesday, yeah, it's good that we're going through this trading plan because I didn't know that. Whoa. Okay, so there's actually a chance that Wednesday is going to be bullish. So if we take this calendar here, and then duplicate this, and then just crop it such that it's only looking like let's use orange. Oh, I don't know. Purple nurple. So that's the question. Is this the week where Monday, Tuesday, and Wednesday it's all bullish because we have a Fed coming in on Wednesday, and that's the only thing that could take a bearish Wednesday and turn it into a bullish Wednesday. And actually, Apple was pretty bullish last Wednesday, which is very, very rare. Does that mean the market is starting to kind of show some love back into the FANG stocks? It could be, and we won't know until after the fact. So, hindsight analysis is not what I do. We take risk earlier than later, and we see what happens. So TGIF is all triggered pretty much, and semiconductors like Nvidia, SMH, it's actually got a pretty good trend here. So I almost think that with this A6 on the SMH on the daily, it looks like the semiconductors, AMD and Nvidia, they're poised to make new 52-week highs, breaking above 253. So lots of upside room for tech, especially semiconductors. There's an A6 in there. That's a BLT. Holy cow! Look at that BLT on the SMH, and then probably there's a weekly A7 in there. Yep, there's an A7. Double D BLTs on the weekly. That's crazy. So yeah, I don't know exactly what this thing is gonna do, what the Fed is gonna do, but it could be that we are in a very bullish week, um, pre triple witching. Okay, so now if the market turns and I'm wrong and Wednesday becomes, because of the extension, because the market is extended and then everything becomes bearish, right? Then your positions are obviously going to draw down. So of course, Tuesday 10:30, before 10:30 a.m., there has to be some sort of risk managing that you have to figure out. I'll be on voice tomorrow morning, assuming all the Windows updates are done and I don't have to stress out about all these things. But if everything is good to go and I don't get too many phone calls, I'll be on voice talking about the market internals into Monday and Tuesday, trying to figure out if this is going to be a 5-day green week. But in history, pre triple witching is generally bullish. So we want to maintain a position of being bullish America rather than being bearish America. Historically, post triple witching is bearish America. So you can figure out how much you want to risk on those puts. Remember, if you get into puts, try to use puts as a hedge. So like using an 80-20 rule, and then or just not trading puts at all. Okay, try to just stay flat, because you know that you have 4th of July coming up, with the first day of July being super duper bullish. So you want to just try to protect yourself. July's will come pretty fast, but let's work with the pre triple witching for June, and then try to lighten up the positions into July, the second week, the last week of June, and then prepare to go crazy bullish into the earnings runs for July into August. That's the general plan for the that I want to share with everybody. And yeah, Amazon started to break out last week. Yep, and it has an A6. It's actually starting to look like it's running into the earnings. And then Netflix, I probably have to, eventually Netflix will start to move, but this has been a very tough, choppy market for Netflix. Buying, if Netflix ever gets to 443, that will be a great buying opportunity. Right now, it is not doing anything. There's a short squeeze setup being shown here on the weekly. That's too long. On the daily time frame, it has a wolf wave 5. So correct. Jay Powell is the only person that can make Netflix move. So even with this candle over candle wave 5 formation on the daily Netflix setup, there is a move that Netflix can do from here into earnings. That's approximately 6.46%. That is not. What? How can that be 6%? A move from where it is right now. Here, look at this. So if you want to time things, like here's a classic example of a wolf wave with timing. Now, we're going to be holding a whole bunch of wolf wave courses because I've collected enough information, but I'm going to give you a preview of one right now. So you've got the supply and demand curve setting up on Netflix, and it's showing that the apex is positioned on July 7th, which is pretty much close to July 4th of July. July 7th is on a Wednesday, and 4th of July is on a Sunday. Okay, so that means you're kind of like dealing with a TGIF before the 7th of July or post. Okay, this apex right here is suggesting that if price of Netflix doesn't move higher from where it is right now, the best long position that you can take for Netflix would be on July 7th. That's right here. And then you would see it kind of move higher. However, there's earnings for Netflix, which is on July 15th. Okay. So that means that it's like a 10-day run on this Netflix trade. So that apex is showing you if there is no trigger or post trigger on Netflix from this wolf wave and it doesn't develop and trade above the 60 moving average, then it's probably not going to move up to this perforated line. JPOW can make it move if there's a 78-minute TTM squeeze, which there kind of is one, but it's hidden. But yeah, that apex on the daily is just showing you that if you were to get into long positions on Netflix, you might want to wait till July 7th. And then I guess the risk and reward here from here to here would be about 13%. Okay. So Netflix, no go. And then Apple is probably the one that I want to focus on now with Roku. Tesla, I don't know if Tesla right now on the daily also has a Wolf Wave 5, but it's actually showing the apex on July 12th, which is 4 days. Is it 4 days? No, 5 days after the Netflix, showing a potential move higher at this point in time. That's where the apex is. Risk and reward for this wave 5, and if it invalidates this wolf wave and it disappears, then Tesla is going to be in a breakout scenario, but I can't see that happening, especially when we got obviously a triple witching week, post triple witching week to deal with. So the main plan here is to kind of do the same thing that we've always been doing, is just to kind of trade around these TGIFs and make 50, 60, 100%, scalping along the way, and then just being a little bit careful that next week post triple witching is going to be very, very tough. You don't want to be you want to be bullish this week but not next week. And if it does change such that the FANG stocks start moving higher in a bearish triple witching post week, then that's a really good sign that this market is the FANG stocks are going to start picking up and making new 52-week highs. From what I see right now, we're going to go through a bit more chop next week, but that's yet to be determined. This week, we're going to maintain a bullish assumption, being careful of the 10 seconds into the close pullbacks. We want to be trying to adhere to our strategies as much as we can, managing risk and improving entry efficiency, and then taking profits along the way. Recognizing that purple Ds have been working great along with any 30-minute to 70-minute TTM squeezes. Some of the best trades last week were PayPal purple Ds with the Google purple Ds, and there was some amazing trades So try to be careful. Just a quick recap. We will go through we're gonna kick off these Wolf Wave courses really soon. So you want to probably participate in them, and then there will be open discussion. Just trying to figure out this new Discord voice thing where people can talk and raise their hands and ask questions and have it more interactive. But for the month of June, with this trading plan, I've pretty much outlined exactly what I plan to do, and then I should probably be a little bit more specific with TDOC. So if TDOC trades under the 6-day moving average, taking a look at TDOC right now. So TDOC has the Cathie Wood momentum potential, and it has great risk and reward. So just kind of have to hold on a little longer to see if we get that breakout coming this week. Obviously, the apex is way out into, where is this? Whoa, it's saying like I've seen this pattern before. So June next year, this might go through a massive A8 type of move, like Tesla. So buying TDOC on common shares and thinking of it as an investment would be worthwhile, but I wouldn't really do that if you want to like cap off your opportunity cost. I'd probably wait for the monthly doji. It is the monthly doji. The doji is, well, I'd probably wait for this monthly doji to be done with first, and then figure out what the next monthly candle is going to look like. But in terms of the TDOC trade, we do have this BLT set up and expecting a breakout along with Roku, along with everything else actually, to break out on this BLT trade. So here is the BLT, that's the bacon. Friday's candle is the lettuce, and breaking out to a 1272 extension near 162 to 165 this week. And as per usual, if the July contracts start to pick up and they double, that's a no-brainer decision to manage a few positions. So if you have like 10 contracts, closing off at least 2 to 3 contracts without thinking would be great. Closing off half the contracts if you have 10 to 5, from 10 to 5 is also a no-brainer. And then you just hold on to those freebies as long as you can and see what happens. And that's what I should have done with PayPal. But the only reason with PayPal looks really good in terms of its A6 and other A7 potential. I had one contract. I should have left it alone. And you can see that there is this wave 5 that is developing, but it already reached its objective here back on April 14th. And it's already taking off here when we got into this purple D trade. And I think there is an A7 in PayPal, but it is extended. Okay, so you have to be careful. I think the next week, or the week that we're dealing with, could actually end up becoming one of these candles right here. So then that would take PayPal up to, let's just assume half that amount. So the next number is 300 for PayPal. All right. ZS, is that the ticker that you want me to take a look at? So ZS, I have no idea what this company is, but this is a Zscaler, and weekly looks pretty good. It's got a weekly squeeze, did the complicated BLT, breaking out on all cylinders. Had a pretty good looking Wolf Wave 5, met its objective and then pulled right back. Then it kind of squeezed out here, leaving a gap here at 178. In terms of its price target, it's pretty simple. If I do a fib extension from here to here and then pull it back, then we're expecting a move up to 210 and then to 223. I don't think this has got an A8 potential, like a meme stock potential. Let's take a look on the monthly. If there's a squeeze there on the monthly, well, there's nothing here on the monthly. So this company is kind of weird. Let me just check on the trading view ZS monthly and see if it's able to see anything. No, there is no A8. I can't see any A8 here. It did look like it triggered an A8 back in April 2020, and it's just trending here. But the A7 is there. Okay, so it does have A7 potential. This A7 potential could pump it up to $300 in the next, probably by September. Okay, September to April, September 9/11. I wouldn't be surprised to see ZS at $300 off that A7. IVR. Ooh, what the? Wow, speechless. So, IVR looks like 1, 2. It does look like it has like a wave 135 structure. So this flush is just the reset. That's the low. This is the wave 1. And then I guess the low came in here. So it's a 2. And then now you're just trying to figure out if this is wave 3 with nice asymmetric Darvis profile, where the low here is at $1.87 and the high is $18. I don't think it's going to get to $18 anytime soon. I would say maybe half of the drop from 18 to a dollar, so maybe like $10 is possible. Making a higher high off of that peak here is something that's an idea. Entertaining the idea for a move all the way back up at $18 is pretty tough, but half of the pullback, where it take you up to $10 to $11, is something that you can trade. Let's just look at the 78-minute time frame. If there is anything that looks like it's worth getting to. Remember, this is a single digit stock of 4.25. So if you do get into these positions, you got to go in the money. Like you got to buy like the $3 to $2 contracts for the strikes. Here, I don't see, there is like a 78-minute TTM squeeze with a purple D. Purple D on IVR looks bearish at the moment. So it will depend on how the pre-market is set for this thing for tomorrow morning. But it looks like it's already made quite a big move off of last week. That's a 43% move. Obviously, taking out the high here at 480 will make it move up to another 50%, up to maybe, and then run up to $10. But if I were to be a betting man, then this would make its move from $4 to $10 sometime in September 9/11. Okay, so September 9/11, from July into September, it's going to be pretty bullish. A lot of catching up to do. A lot of markets are going to be going to all-time new highs. So that's what we are assuming, right? It's always better to assume that you're bullish America than bearish. But I totally understand that the market is at 52-week high. So it's really choppy sometimes every time a 52-week high is printed. But we do need to understand that there's a big disconnect between the S&P 52-week highs and the FANG stock 52-week highs. With all these other stocks that have taken big dumps like IVR, you can see there's lots of gaps. There's a gap at 13.97. And yeah, in terms of long-term play, if you have money that can sit on the sideline for at least 1 year, there's a great chance for this IVR to run up to $13, $14. Actually, there's another gap here at $16. And yeah, 16. So that's yeah, cheap leaps will work. I think you got to give it about you got to give it at least 2 years on leaps. I would assume would be. Let's take a look at the leaps together. IVR. Yeah, so you go January 2022. So yeah, makes sense to me. So you got a great opportunity on these IVRs. You can put in like the four. You can actually go out of the money on these ones. Even January 2023, um, you can buy the $5. Actually, you can buy the five. You can buy the $7 strike. You can buy the $7 strike for 70 cents, 72 cents. That's $70, right? Buy like two of those. No, buy four of those for $400, right? And once you double it, once your positions double from 70 cents to a buck 60, then you just leave those, close off two, and you got two left. And then if those two, if I'm right, and IVR runs up to $18 within a year, then it's 18 minus 7 is 11, like 7-Eleven, and you got two of those contracts. That's going to be worth about $2,200 on a $140, $150 contract position after closing for free once it doubles. So that's a great long-term IVR. So you just have to make sure you're not going to go all in. Like I would put maybe like on a $10,000 account, I'd probably put in like 1,500 in there. Okay. So 1,500 for a $70 strike. So 1,500 divided by like, let's say 75 cents gets you 20 contracts, right? So then the game plan is pretty straightforward. You got 20 contracts and the things go double, right? Then you close off half and you got 10 left. These are for free. You got 2 years left. And then the gaps, that's what you're looking for, is just the gap fill within the next 2 years. If it goes up from 425 to $18, then your $7 contract's going to be worth $11. So 11 times 10, right, is going to be $11,000. So that's not bad. I mean, consider it. I don't think it's makes sense to do 1 year. I think it makes more sense to get the 2023, and then just stick with the plan that once it hits a double, then you should. I guess you can do the 550s because those are also 70 cents. I don't think going out too far out of the money, you know. So if you select the January 2022, then it's probably better to go in the money. So like $3. So $1.20 here, $3.50 contracts, or the $3 contracts at $1.40. So then that gets you into 10 contracts. So when you double these up, so you get, let's say you go get the 350 calls, right, for January 2022. That means you're paying for the premium. Sorry, you're paying for the intrinsic value. So you got intrinsic and extrinsic, but more intrinsic. So you buy 10 of those, which is approximately 15% of a $10,000 account. And then they double from $1.20 to $3. So you close off half. So that means you got 10 left, the 5 left. And then from 350 minus, so $18 minus 350, that's a $14 contract. 14 times 5 gets you $7,000. So the difference between the 2023 is that you're going far out of the money on those $7 contracts, but you get a little bit more. So yeah, even I guess to do that, you can go even with the January 20. There's so many options, right? You can buy more time, or it's hard to say like which one is going to work out, but if you want the time component, then yeah, I'd probably go for the $4, right? The home run trade would be the $7, obviously. But yeah, that's the plan. I mean, if you're into tying up some capital for long-term investment, IVR looks like a great one. So we can take the ride for that one. That looks great. We got option scalpers asking about Vayak. So that's the Korean brother from another mother that got his ass handed to him. There's an A. I would probably just do the same thing with Vayak. I would just probably look at the leaps. Let's take a look at the leaps. I don't think we can time this thing because this thing has been raped. January 2023. Oof. And then it's saying $89. The spread is pretty nasty. I would, if I were to do this one because of its history, I would probably just do one contract. Buy just one. All you really need to do with this thing is just buy one contract. Just buy it at buy the in the money contracts here at 37.5 for $700, $800, and just hold on for at least till September 9/11 for this year. And then that should 2023. I think you need to give it 1 January. So January is typically bullish. So instead of the January 2022 contracts for 37.5 strikes at 850, get one more year out and look for those $800 contracts again. So that'll take you around the $50 contracts. Just get one of those and then just sit on it. I don't think going any further out of the money makes any sense. You could probably go as high as, this one right here, the $60 contracts, because the spread is at bid is at 4.35, ask is at 480. Those look okay with the open interest and stuff like that. So that one is okay too. So $60 strike for 450, one or two contracts. You don't want to go overboard on this garbage company. And it's not, the risk is so low. Like you're putting $800 for 2 years to make a move up to $80. So you get two of those contracts. Just assume it goes worthless and see if it fills that gap at 80. Then you got a $20 contract that's $4,000. Just holding on to those contracts for till September 9/11. And then at worst, you can hold it all the way into January because you got January effect, and maybe some institutions come in and buy it up for the month of January. And then you can probably still end up with $20 contracts. That's a really long-term outlook. That's you're like not doing anything. You just got to leave them in there. All right. Next question is, next ticker is DDOG. DDOG has a nice looking A6 cup and handle formation, and there's a gap here at 114 and 100. So is there a 78-minute TTM squeeze? No, there isn't. So I'd probably wait for the next 78-minute TTM squeeze. Looks like a lot of the pre-market gaps have gone taken out, except for this one right here, I believe. I don't know if that's a gap there, 76. So that one is with an A7. Oh, there is an A7. Okay, so that looks pretty good. And then earnings August, so earnings run potential. It has a little bit of a meme A8 kind of a setup, but A6 wise, first target 100, 103, and then the next one is 114. So set target DDOG 103, and then 114. Next ticker is Twitter. Twitter has a gap, so its short-term target is $63, $64. Is there a 78-minute TTM squeeze? Yes. So it could happen this week. So Twitter, $64 gap fill within. All right. How about Roku Leaps? Yeah, we we had Roku Leaps $600 calls, but now we're just focusing on the TGIT. So you can get Leaps on Roku. That's so if you have cash to kind of um, just sit there and do nothing type of investment opportunity, then looking to get Roku Leaps on the one day before July 1st would be something that you'd want to consider. Let's take a look at the Leaps together quickly. So January 2022, these are pretty damn expensive, but the January 2023, a little bit more expensive. And damn, these Leaps are very expensive. I think we had the $600 calls, right? How much are they now? Yeah, they're now at $6. I think we closed them off at around 9. How much did anybody have those? I can't remember. Did we close those Roku Leaps at $9? I don't remember. Yeah, I think the Leaps for Roku makes more sense. It's the hard part. The hard part is like that post triple witching part, right? Like I can't. I just don't. I know that it's bullish this week, so you can get into the Leaps at like $600 calls for $600, and then it might make like $1 or $2 move from 6 to 8. But I don't know what's going to happen after triple witching. So triple witching could end up becoming very bullish. There's a move, obviously a gap at 433, and that would be awesome for the $600 calls. The $600 calls probably be worth like $12 by then. But I just don't know. That's the whole point of this focus session, is just to let everybody know that post triple witching is going to be a little bit tough, like triple witching here. I don't know. So, and then there's this if it can catch that gap fill at 264, like obviously if we draw this line of Roku, it's just still pretty damn bearish, right? Like you draw the trend line. I don't know if that's the best looking trend line, but you can just draw just connect two dots in space, and I guess it's still, if you've got some pullback potential here, and then rips up, or just rips up. And in between now and next week, we got that triple witching. So timing these things are very important in this option game. So I would still give it maybe some time. Heikin Ashi wise, it looks really good. The momentum's still strong on the daily, but the weeklies got double Ds. So it could be a massive breakout this week. We just don't know. You can try to, what you can do is just get into those Leaps, the $600 calls. And if we don't get that 12% move in Roku this week and it just stays flat, then you're not going to lose your shirt, because the premiums will still be jacked up at around $5 to $6. You might lose $1 on them, but at least the risk and reward, because that's the assumption, right? We're assuming this week Roku's going to break out and make a 12% move, and then next week on the next TGIF cycle, it moves up another 6 or 7%, doing like filling that gap there, and then selling off from next week on Tuesday. So jumping into the Leaps now and then looking at how Roku trades between Monday and Tuesday, seeing if it does make that 12% move. You'd have to buy Roku at the open tomorrow. and then see if it moves 12% from Monday to Tuesday. If it doesn't and it trades like crap, then you can close out those leaps for like, if you buy them at 6 and now they're probably trading at 525. It's not the end of the world. So you still can preserve the capital, and then just wait after the triple witching, or maybe try again on the next TGIF. Okay, so thank you very much for your time. Also, Kate, yep, thank you very much for your time. And I have Zillow. Okay, let's take a look at Zillow quickly. Zillow has an A6, but it actually looks like it's very bearish to the downside. So I'd be a little bit careful with that, because the Heikin Ashi candle's red, and very red on the weekly, and yeah, very red on the monthly. So try to be careful with Zillow. But on the 70-minute, it does have a 70-minute TTM squeeze. I just don't have a lot of experience trading Zillow, so be careful with that one. All right, thank you very much for your time. The session has been recorded, and I'll post the PowerPoint presentation here in the YouTube link. I'll post all the focus session groups. We'll be doing these focus sessions once on Sunday and once on Wednesday, and I'll post it in the market update channel here. So that's where we'll keep all our focus sessions. I think I posted the last focus session here. Yeah, if you go there, you can see the link of the PowerPoint here. So I'll post the PowerPoint presentation there for everybody to reference. Okay. All right. Thank you very much for your time, and enjoy the rest of your evening.